This video is for the 5 things you should consider before you refinance. Ready, set, go. Hey everybody, Brady Webb from American Mortgage Solutions. Hey, thanks for checking this video out. I'm going to talk about the 5 things you should consider before you refinance. Now, most of us always think about refinancing to lower the interest rate. And yes, that is a very important part of refinancing, being able to lower your payment. But there are some other things we also want to consider before we jump into starting that process. So I'm going to cover those here. Now let's get started with number 1, which is cutting the interest rate. So what we'll do is we'll take a look at, whoever you want to talk to should take a look at what your current interest rate is. Now, if you're not 100% sure what that is, get your most recent mortgage statement, and it will be on the mortgage statement along with the current balance on your mortgage. So whoever you work with, that would be the first thing they should ask for. And then they should take that information and go out and compare that to what the current market rates are based on what your needs are. And with what we do is we'll take that information and we'll look at your old loan and we'll look at your new loan, and we lay it in this really nice software that we have that will show us, okay, if you stay with your old loan, this is what it's going to cost you over time. And we can look at that 2 years, 5 years, or whatever the full remaining term is. And then we'll also take it and say, okay, if we can get you this new rate, this is what your new rate would be, and apply that to your existing balance, then this is what it would cost you over time. So, we're actually comparing apples to apples and looking at hard data to determine whether or not this makes sense for you. And if it doesn't make sense, we would never recommend you to go forward. So that's the first thing we'll look at. The second thing is how much longer are you going to be in your house? So for instance, let's say we look at your mortgage statement and we know that your mortgage started 9 years ago. So you have 21 left because you started with a 30-year fixed. So we'll look at that number, and again, we plug that into our software to determine, okay, do we take it back out to a new 30 to help improve your cash flow? If that's something that you need. But do we really want to put it all the way, add 9 years back onto the end of the loan? Because you're already at 21. We can look at a 25-year loan, see what that payment looks like. We can look at a 20 and cut a year off. Maybe even a 15, or we just leave it the same and we'll give you a 21-year loan. We can do that as well. Just keep your term the same, lower your interest rate, cut your monthly payment, and tell you what that savings would look like. And at the same time, we would be able to tell you how long it would take you to basically break even based on what it's going to cost you, which we're going to get to that in a second. The third thing that we want to look at is how much equity do you have in your property? Now, we've been very fortunate over the last couple of years that based on this market that we're in, home values have gone up, up, and up, and up, as I'm sure you're aware of. So you've built up a lot of equity in your property, and we want to look at that. We've got some really cool tools that we can use to determine what your home's value is. Now, we do that for a couple of reasons. One, we want to make sure that we're able to refinance your house and meet the refinance requirements as far as what the loan to values need to be, which shouldn't be a problem today. And the other thing we want to look at, very important, if you have mortgage insurance currently, what some people call MI, on your loan, then there's a really good possibility we can get rid of that for you. And in some cases, that's hundreds of dollars a month that we just knock off your payment right there. So we're going to look and see how much the equity you have, and to determine, 1, if we can do your loan, 2, to see if we can remove your mortgage insurance. In other words, we have to finance 80% of the value or less. And 3, we want to make sure that we can actually roll in any of those costs to the loan so you have no money out of pocket. Now, the fourth thing we want to consider is, could we possibly, before I get to that, let's talk about number 4. Okay, we're going to stop it right here and redo this. So the 4th thing that we need to look at is, what's it going to cost? Your closing cost. Because, those are the 2 most important things. What's my payment going to be? How much is it going to cost me? So we are going to figure out what the closing cost would be to actually refinance your house. Typically, it's going to be an appraisal, credit report. We're going to waive the lender fee for you, so don't worry about that. We're going to get rid of that for you. That's not going to be part of your closing costs. That's what we do here at American Mortgage Solutions. The other thing would be the title cost, because we do have to do a new title search to verify what liens are against the property, and the attorneys have to close it so we can make sure that we release the old mortgage correctly and put the new one on. That's important. And then we will actually reissue your old title insurance policy, which will save you some money. Then you've got some other little things like recording fees. There might be a verification of employment fee because they require us to get a third-party verification. And then, hopefully we've been getting a lot of, one thing that can save you some more money is that we can actually waive your appraisal. So depending on how long it's been since we've done your last loan, how long it's been since maybe a property sold, we're getting a lot of appraisal waivers right now, which means we don't have to appraise your property. The automated underwriting system accepts the value that we put in, and then we're able to move forward without having to send an appraiser out. Okay, so that's the 4th thing is your closing costs. We've determined what that's going to be, and we plug that also into our software, and that helps us determine how long is it going to take our borrower to recover the cost to refinance the loan, which then shows that it's paid for itself. So with that being said, if you're going to be in your house for maybe a year, we probably might not want to do anything, even a year or 2. If you're going to be there a little longer than that, then it will make sense for you to probably look at refinancing. Now, moving on to the 5th and final thing to consider. That would be, again, you remember me mentioning earlier, we're going to look and see what the value is so we can determine how much equity you have. Well, right now, there's a lot of people pulling some money out of their homes because, again, properties have appreciated. So there's a lot of wealth in your house. Now, a lot of people are pulling money out because they've been wanting to make these home improvements for quite some time, and they just haven't put it out, especially with COVID and, the job situations last year. Just might not been felt great about maybe doing something at that point in time, but we could refinance, pull the money out, and you could get those home improvements done that maybe you've been putting off. The other thing you might want to do is pay off some credit card debt, maybe student loans, or anything like that. And we could pull that money out at a very low rate, cut payments on what you currently are paying on maybe other debt. And in a lot of cases, that saves people hundreds of dollars. In some cases, I've seen thousands of dollars. So that would be the 5th thing to consider. It might be a good time to pull some money out and put that back to use for you, put that back to work for you. So those are the five things to consider when you're thinking about refinancing. If you have any questions about any of this, I'd be glad to answer those for you. Me and my team are here waiting to help you. The only thing we really need to get from you is that mortgage statement. That mortgage statement will give us the information to crunch the numbers and send you back the report, and we'll do that with an explanation by video so that we can explain that to you, and we're glad to jump on a phone call with you and help you get started to try to determine if now is the right time for you to refinance. The last thing I'll say about that is rates. They've actually removed the, as of last Friday, the FHFA, who oversees all the conventional loans, Fannie Mae, Freddie Mac, actually removed their adverse market hit of 50 basis points that they imposed last February. So that actually helped rates drop just a little bit more. So important to let you know that. So anyhow, how do you get a hold of me? All right, first, you can email us at Team Brady, that's Team Brady, my name, Bredy, at loansolutionsnow.com. It's loansolutionsnow.com. We have loan solutions. Or you can call us at the office, 2 numbers, since we have 2 locations. We're in We're licensed in Louisville or in Kentucky, actually all of Kentucky, all of Florida, all of Colorado, all of Tennessee, and Indiana. But the two main numbers are 502-327-9770. And then there's the Florida office number is 239-766-8344. Doesn't matter which one you call, all of us will get we still get all the phone calls. So 239-766-8344 or 502-327-9770. And if you want to contact me direct, it's 502-655-0106. You can also find us on the web, www.loansolutionsnow.com. Have an amazing day. Thanks for the time. I'll be bringing you some more important information soon. Appreciate you watching. Have an amazing day. See you soon. And we appreciate you.